So I did not grow up wanting to be an investor. Nobody in my family had a lot of money. We didn't have an investment portfolio. My parents didn't really own any stocks. My dad sold textiles, and my mom stayed at home, then went back to college. We were a very educationally based family, but didn't have a lot of money. I was a good student, went off to University of Michigan, studied political science and economics. Was really fascinated by the combination of those two things, which led me to consider law school. Graduated from Michigan, went on to Harvard Law School. Really enjoyed learning the law, working at law firms during the summer. And it was really that transition from thinking about the economics background of this country and how economies and companies work, and then beginning to work at a big law firm, that I began to think more about what makes a business valuable as opposed to what are the interesting legal things to work on. I graduated from Harvard Law in '91 alongside our president, who was a buddy and I played basketball with, but I don't really talk to anymore. And I went to a good corporate law firm where I practiced law for 3 years and passed the New York and New Jersey bar, did a bunch of tax, litigation, and eventually a bunch of M&A work, and working for some of the big LBO investors and companies that were sort of on the cutting edge of capital markets and capital finance transactions. And it was there that I really began to think about what made companies valuable being a more interesting thing to do as a career than how to help them do transactions. And as I became interested in that and started thinking maybe the law wasn't the right path, I began to read all of the books about investing and really fell in love with the concept of investing in stocks and investing in companies. That led to leaving the law, and I got a job in the research department at Smith Barney, which was a mid-sized retail brokerage firm that got a lot bigger when they merged with Lehman. There was an army of brokers to feed with product, and our group was a particularly active group doing both quantitative work as well as bringing individual companies public, and then writing research on them, and also building model portfolios of growth stocks for our brokers to go out and sell. That allowed me both to really get a fundamental background in all the different styles of investing, quant, value, momentum, combined with the continued reading about all the great investors, really led me to the beginnings of what really is our philosophy here at RiverPark, which is to really try to combine the best of thoughtful research-driven long-term investing, the best of value aspects of investing, along with the best of growth, as opposed to choose one or the other, which is what it seemed most of our clients did. Within a couple of years of really a year and a half, 2 years of working at Smith Barney, I realized I had really found my calling, and investing in companies was what I wanted to do with my career, but I really wasn't doing that as a sell-side analyst at a big brokerage firm that had a lot of different constituencies and a lot of different politics. So that really led me to realize that the next step was to go to a great investment firm and try to learn from somebody who is really buying and selling stocks and building portfolios, as opposed to being somebody who wrote about it. So that led to switching from Smith Barney to a job at Barron Capital. Ron Barron, who's built a big business with our help, and in those early years. Great long-term investor, research-driven investor, not into trading, a lot of the things that I was looking to pursue. I joined Barron in 1995 and really grew along with the growth of the firm. I started as a research analyst, pretty much covering everything we worked on at Barron, flying around the country, building models, which was not a big push for Barron at the time, but to really add a quantitative element to it, where we really looked at the company as a private investor or an LBO investor would look at a company, build out 5-year models, really disciplined cash flow models, earnings models, go visit everybody we invested in, go talk to every customer, competitor, board member, to really try to understand the long-term potential for that business. My job at Barron evolved. I was there for 11 years. It's where the core founders of RiverPark met and worked together. my job evolved from being sort of Ron's right-hand guy and chief research analyst to being a co-manager on our small cap fund, to running our the REIT portion of our growth and income fund, eventually to being the co-manager and then lead manager of a poorly timed but incredibly rich learning experience of launching a tech fund in March 1 of 2000, sort of the top of the dot-com bubble at the time, and the experience of running that fund and restructuring it after the co-manager quit and the fund was down a lot, and restructuring it and really sort of being at the front end of understanding the internet and technology and its impact on companies, but from a perspective of non-bubble, non-hyped valuation. We really fixed that fund, had some great returns that led to the launch of our large cap fund at Barron, which really was the precursor to what we think of as both the core franchise here at RiverPark, which is great long-term growth investing on the long-only side with the RiverPark Large Growth Fund, but also really combining all of our different skill sets in both small cap, large cap, but also the relative maturation of companies and the impacts of secular change on businesses to also carry a short book and businesses we're shorting and be able to manage both exposure, long and short, and then to have both of those core products, clients who want a great, thoughtful, research-driven, long-only fund is we're really proud to offer the RiverPark Large Growth Fund, which I manage, and for clients who want an even more involved fund where there's small caps, large caps, derivatives, the ability to use debt or equity, and the ability to short and run a balance sheet, which is the RiverPark Long Short Opportunity Fund. The RiverPark team has been working together since 1996, and the RiverPark Long Short Opportunity Fund is the culmination of our many years of investment experience together, managing both long-only and long-short portfolios. This fund was first launched as a traditional hedge fund partnership on October 1, 2009, and we converted it into an open-ended mutual fund on March 31, 2012. Throughout our careers, we've seen innovation and secular trends drive the emergence of successful businesses and the demise of declining businesses across a full spectrum of varied economic conditions. We've taken that experience and reflected on it, and this fund is the culmination of all of that work. First and foremost, RiverPark seeks to invest in quality growth businesses. We do deep fundamental company-specific research to find the growing businesses that we believe to have sustainable competitive advantage, and we invest in those companies that are taking advantage of long-term secular trends, have world-class management teams, and have the potential to be multiples larger in the future than they are today. Through nearly 2 decades of investing together, these kinds of companies grow across all economic environments and through different market cycles. Unlike a lot of growth managers, though, we are also value investors. A great company only becomes a great investment if it is bought and sold at a great price. We call this a value orientation towards growth. When there is a large disparity between our perception of value and the markets, that is what underlies our portfolio decisions. Conversely, it is our goal to short those businesses that we believe are poorly positioned for secular change and failing to adapt. Those businesses that are losing competitive advantage, whose management team's strategic focus is misplaced, and businesses that we believe face multi-year declines in profit and value. Again, we wait for the right prices to short these businesses. Where the market perceives a much more optimistic potential for the company than we do, we think that provides an incredible opportunity to short businesses who we think have long-term secular declines. At the end, we are long-term investors and not traders. We believe that secular trends and business transformation, like the compounding of money, takes time, but is certain. We match our investment time horizon with the industry changes and the durations of the positions in our portfolio, and then we aim to take advantage of the current market volatility to make changes in the fund. The ability to have a long-short fund allows us to use our balance sheet to hedge out longs with our short book and to use derivatives, all things that are not available to the traditional long-only fund. Our partners here at RiverPark remain some of the largest investors in the fund, and we look forward to having you join us.